Good morning from Chicago traders. It's 8 a.m. Chicago time on Monday, the 26th of July, 2021. Thanks for joining me this morning. Just a quick check of our sound levels. I want to make sure that I'm nice and clear. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're at episode 2041 this morning with a market that is really showing signs of mild risk off. You can see the indices are all below settlement, Friday settlement, as we pull back a little bit after just a roaring week last week, a big bullish engulfing week on the S&P, taking out the low as well as the all-time high, the prior week low as well as the all-time high. The volume is now at 199,000 in the S&Ps. Relatively decent activity, good range for the week so far, for the day so far in the overnight session. We're seeing again mild risk off with most indices being lower. The Nasdaq has pulled back as far as 15,038.75 this morning, holding above the 15,000 mark. Still, Nasdaq at all-time highs. The S&P has pulled back from the all-time highs as well, putting in a low of 43.7550. Overall, we had a V bottom in the overnight session. We'll go over that. This week is really a big week. We basically have the Fangman stocks coming out this week. Lots of big data, big tech earnings. On top of that, we have the FOMC on Wednesday. There's just a lot going on. There's news on Bitcoin. You can see Bitcoin's up 18-19%. Quick turnaround from below 30,000 as two things have happened. One, Elon Musk has said that Tesla will resume taking Bitcoins for payment. But more importantly, Amazon is looking at integrating Bitcoin as a payment method and potentially releasing its own crypto altcoin in 2022, giving the entire crypto space a big boost. I'm not going to do any analysis of Bitcoin here online during the Trader Bite, but if you look closely, 41,000 is a key area, and then above there, resistance at 50,000. Beyond there, we may see new all-time highs. We'll see how that rolls. I'm speaking completely technically. I know Bitcoin or crypto brings out a lot of emotions in people as they're invested, but this week, an insane number of earnings releases. Again, Tesla, AMD, GE, Google, Starbucks, Microsoft, UPS, Apple, Ford, Bristol Myers, Pfizer, McDonald's, Facebook, QCOM, Boeing, Deutsche Bank, Barclays, Merck, Ambev, and Amazon, AstraZeneca, Credit Suisse, Caterpillar, Exxon Mobil, and Procter and Gamble are the majors this week, and they're just happening rip right after each other. Lockheed Martin this morning pre-market, and we're looking at Tesla after the close. Other than that, the major economic events we're looking for today is U.S. new home sales for June, and a low tier number, Dallas Fed Manufacturing Index at 10:30 Eastern. The main things that are on deck again is earnings. The infrastructure bill goes back to the Senate floor. The Fed is now having to juggle inflation, a rapid increase in pricing versus COVID, rising COVID, and of course the solution for that is to spend more, but of course with inflation, the solution is to spend less or to print less. And then also Goldman Sachs put out reduced its forecast for U.S. GDP for this year. So a lot going on. Expecting pretty good action here in the open. We're opening in the S&Ps a little bit below the close on Friday. Let's take a look at what was expected on Friday. On Friday, we had a gap. This is from Friday's video. Friday, we had a gap. We were trading in a gap up, and I had discussed that it is likely to find support as far down as 71. Not expecting it to fill the gap in on the primary scenario. Projecting 20 points higher. We're looking for a push into 90.93, which was, of course, incorrect because Friday had something like 36 points in it. Anyway, I'm not. I don't project the ranges. I don't try to project targets in terms of range, but the expectation was for 19 to 20 points, and it got a lot more. It ran pretty good into the close. So scenario one was pretty much spot on. Here's what Friday looked like in our review segment. This is basically Friday. We ended up leaving the gap open, pulling back to 72.50. Remember, 71 is what I had put down as the potential support. 71, and which is an old MC point of control, volume-based point of control. So I was expecting it to push as far down as 71. Expected support in the 71 area. Turned around at 72.50 and broke to the upside. In what is a big impulse with pretty decent delta. So the idea here is to look for a pullback, look for some area to lean against long, or trade the breakout from the pullback, not the breakout from the rally, but the breakout from the pullback, giving us a bit of a false entry there, and then a firm entry right here. Nice little pullback to the entry right here for a continuation move higher, paying for the loss and pushing through 4,400, only to pull back again before finishing up. It was tough to hold along through this. We can see there's some pretty good separation from VWAP, full session, or RTH and full session, and that separation continued throughout the session. It was basically a trend day up on Friday, trend day up, with a point of control closing, with a point of control shifting to the upper end of the range. And with that being the case, the point of control shifting to the top of the range, this sets us up for potential for a push higher, or at least a test higher in the overnight session. A test higher in the overnight session, which we did not get, which was kind of surprising that we didn't get. Settle is at 44.03, and we generated a brand new MC point of control potential for the week, right up here in the 44.03 area, which is also settled and above the century figure. A little bit of resistance now in the S&P and the way it was set up. As it made this run up into the close, it had relatively weak delta. Aggressors really were more offsetting the buying with some selling, and so the delta didn't go anywhere despite price going higher. So that's what we saw on Friday. Looking at today, here's the wrong one. Looking at this morning's action, or the reopen, we reopen at settle basically, and then we're not able to push through this this MC point of control, this high volume node left behind on Friday, before sellers come in the Asian session. The Asian session is likely to be governed by what's going on in China. China's really cracking down on big money-making stocks. and this morning it happens to be the education stocks. They're banning they're banning private tutoring and private education on subjects that are covered by public schools. So they cannot be taught privately. And it seems like it's a move to not to protect the public school system. And so a lot of stocks kind of took a hit as more and more investors are getting nervous about what China's doing with not only crypto first, but now they're stepping in and heavy-handedly pushing the equity market around through regulations. So that's where that stands. We end up with a multi-distribution profile here, some pretty active price discovery, and we're finishing right with the point of control, VWAP, and mid stacked on top of each other. Where is that 43.90 right here? You could see the mid VWAP and the point of control on top of each other. This is likely to create some turbulence on the open. It's likely to create some turbulence on the open, and it's likely to push things around a little bit. I'm seeing, there's likely to be a lot of activity this week with the, as I said, with the earnings FOMC on Wednesday, and we're near all-time highs. So there may be some hedging activity, some exposure protection, and maybe even some new money flowing in. A number came out this morning: $900 billion came into the mutual fund and investment instrument market in the first half of this year. Money like that hasn't come into the market since the 1990s, something like 1992. Huge money, and if I recall, at that point we were in somewhat of a recession. I believe that was the start of Bill Clinton's tenure as president, and there's just an extraordinary amount of positioning, an extraordinary number of private small investors who have taken their trading accounts into their investment accounts into their own hands. And that's, you get the meme stocks, you get the Wall Street bets movements and things like that. It's very extraordinary what we're seeing. It's a good time to be in the market and to watch what's going on. History's in the making, in my opinion. Again, we've tested below. We have a nice little V bottom here in the S&P, and we're holding steady at the mid on top of the overnight point of control. The market is likely to tip one way or another this morning. There's also a strong potential that it may not go anywhere until in anticipation of the Tesla release. Not sure. Tesla is a big player in the Fangman Plus or Fangman T index, or the index of the large cap companies, the behemoths of our markets. So that's where we stand. So let's take a look at what we have got and what we have done in terms of what is going on with this thing. In terms of last week, I mean, if you look at last week, we had a gap down on Monday, beautiful selling spree, a resting day, an extension and resting day on Tuesday, large gap up, which remains open, pretty hefty gap up on Wednesday morning, gap up on Thursday, gap up on Friday. Oh, hang on. I apologize. This is incorrect. I need to reset this chart. Looking back, I'm like, there weren't that many gaps. I would have marked it. Yeah, so we had a gap, a large gap up. I apologize. I'm mixing this with other commodities. We had a large gap up on Friday that didn't get filled, and we had a large run up on Tuesday, which brought us back into the prior week's range. Remember, 43.14 was really significant, and we ended up pushing back. And the goal, the key element here is if it holds above that 14, we're looking for 43.71 as a key test area. We ended up skipping over it in this big gap, in this large gap on Friday. And that area remains untested from above. The point of control, that weekly point of control, remains untested from above. This 71 area will be the big test area for today. We finished very strong. You can see we finished very strong for the week, and it's a very heavy price discovery pattern here in the profile. Huge run up in the profile overall. And we've got some structures, weakish structures. Let's throw a composite on this, even though it's kind of been one way. And you could see that the 43.50 is a big magnet in this area. But I got to tell you that although it traded quite a bit down here, and you can see the shape of the profile, the microcomposite, it's tough for me to see that 43.50 has any real significance here. So we're going to see how this week plays out. Again, there's a lot in play here. We've seen an increase in the close-to-close volatility sigma. We've seen a pickup in the range, and we're seeing a little uptick in volume as well. And I'm expecting that to spill over into this week, given the events of this week. So this is a decent week to be paying attention. Let's take a look at what's expected for today. Okay, so for today, in fact, let me change this so that it's pushing across. There we go. For today, again, the gray bands are my stock zones. These are areas I'm expecting the market to react at. They're generally caused by an overlap or multiple pieces coming together. The key thing to remember is we are opening on top of the mid, the VWAP, and the overnight point of control. And we've got this area up here, this low volume node up here, right up against the 4,400 above. And then we have this area, this low volume node, right down here at the 43.86.85. This is 85.86. Let's call it 86. And this is 98. So this morning, the expectation is an open auction that is responsive. I'm looking for it to push into the 4,400, consolidate up there, and then squeeze and come back into line with Friday's point of control and Friday's settle. There's a fair amount of resistance here, so this may take a while to get done. I'm looking for it to chop around this point of control up here at 44.03.75, 44.03.75 before squeezing that high. Remember, we finished strong on Friday. We finished quite strong on Friday. It was expected to see an overnight high taken out. Friday's high 44.08, and it didn't do so. So I'm looking for this to push through and then fall back in and finish around where it was on Friday, 44, call it 44.04, somewhere around there. That's scenario one. Bullish scenario continues. Friday's action. We did sell off, but remember, the overnight session gave us a V bottom here, a clear rejection, and it's up to the day trading, the RTH traders and investors to decide whether or not they want to retest that V bottom. It's not likely to be the case, but if it is, that's good too. The secondary scenario, open auction, in range, push higher, tag the settle, consolidate up here, fall back into the open, and then drop into the overnight point of control for a test to 86, consolidate, only to come later and test that V bottom later in the session. The secondary scenario could push as far as the overnight high for the overnight stat. Remember, the overnight statistic in the S&P and several products is there's a historical probability, and again, past performance is not necessarily indicative of future results. There's a historical probability of about 98% that the day session would test the high, test or equal the high or the low of the overnight session during the day session. So always looking for and trading off of that overnight stat, high probability stat there, especially for opening right in the middle of the range. Again, we're just above mid, we're just above the point of control, so there's a fair amount of room to 44.05 above and 43.75 below for the overnight stat. So again, we're opening in the middle of yesterday's or Friday's range. We're opening in range. There was no value on Friday. It was a trend day. There is no value in a trend day. We're opening below the point of control, which coincides with settlement. So I'm expecting the upward movement to be a magnet. In other words, responsive buying would be the response to today's pre-market action is to the buy side, and I'm expecting it to push to the buy side slightly. So that's where we're at today. Good luck, and I'll catch you tomorrow morning. Hey, and one more thing. On Thursday, I'm taking off on vacation, and I'm gone through next Tuesday. So there will not be any Trader Bites Thursday through Tuesday of this week. So again, Thursday through Tuesday of next week, I am gone for 5 days, need a break, and so I'm taking one. Good luck.